Well, we always look at the long-term opportunities, and we think they're actually pretty good. This is a low-growth market, and we think there's a number of stocks, not that many, we've only got 23 in our portfolio. We think there's about 23 stocks that can grow well above the market, and so we're happy to be fully invested in them. So the stocks we're not holding as much of as the banks. We think their long-term credit growth is going to be challenged. It's not like it was 10 years ago when credit growth was high double digits. It's now sort of middling single digits, and that's pretty hard. No matter what other things are happening, it's very hard for them to get that same level of growth. So we think they're challenged. What we do hold, Macquarie, which we think, with the level of merger and acquisition activity, that M&A activity will drive higher than ever profits for them. And we hold a number of fund managers. So we hold BT Investment Management, and we hold Platinum, and we hold Henderson's and AMP. We're a fund manager ourselves. We understand how funds management works, and in these sort of markets, those businesses which are very focused on producing alpha are being rewarded well, and that's very good for our clients. There was a lot of IPO activity last year, so a lot of companies came to market. We looked at probably 60 to 70 opportunities, and we only picked a couple. We're very exacting in our requirements, and we want decent track records, and we want real evidence of competitive advantage and long-term growth. And some of the more recent companies that have come to market haven't done that. I think what's more interesting is the M&A activity, and we own a company, for example, Vida, which is under a very conditional takeover offer. But the theme, I think, is important to understand, and that is, with the Australian dollar low, it's very advantageous for US companies particularly, but foreign countries, to come to Australia and buy up cheaply. In the same way that some Australian companies did a year or two ago. So we own Iris, and they made some acquisitions in the UK quite cheaply. They deployed a lot of capital in building there while the Australian dollar was strong against the pound. And in our small cap fund, Corporate Traveller, the same in the UK and the US, have been able to make good acquisitions quite cheaply. Of course, that's the opposite now, and so we're on the end of... I expect there to be more of US companies looking at Australian companies and thinking they look cheap, especially at the quality end.